Everyone, today is Friday, February 5th, and I will try to present you a trading strategy for the NFP. So, as you all know, the first Friday of the month we have the NFP, and for this month, for February, the market is expecting to see a 190k non-farm payrolls number for January. So this 190k is not a bad number. In my opinion, it's still a very good number that the US economy could show. But in my opinion, I think, and based also on what we saw on Wednesday for the ADP, I think we will see a better than 190k. Now, how you could trade the NFP trying to avoid the volatility that like in almost all the time we see a huge volatility in the market. So as you know, the US dollar Japanese yen is one of the best pairs to trade for this event. So if you look on this weekly chart, it is very clear that 160 is a very strong support down here. And if the NFP will be such a bad number that will push the US dollar Japanese yen down to break this support, then I think the next area we should look at would be 105.50. Okay, so this let me show you why that area, and there you go. Okay, so this area over here is going to be the next support. So there are a lot of pips to do. So what's important for today is you to have a clear idea, or let's say not clear, but to have a strong sentiment on what is going to happen. Now, if you look on the 4-hour chart, this chart is not telling us much except the fact that we are needing the support here. And if you switch back down to the 1-hour chart, we might say that we are looking here at bullish divergence. So we have here low in the price, and as you can see here we have a divergence with the RSI and the MACD. Okay, so what does this mean? It means that we could have assisted to a sell-off in the previous days of the NFP, and now maybe the banks and big investors are loading long positions for the NFP while they are expecting a very good number to see today. But in the same time, if we will see a bad number, this divergence will be solved, and then the US dollar Japanese yen could fall. And there could be a third scenario in this case, and that could be first the banks to push the price down to trigger some stop loss down here under 160, and then to go back up on a very good NFP. Now, if you go on our trading platform, we have here the US dollar Japanese yen, okay, and we also have the US dollar Japanese yen as option. Okay, yeah, there you go, 7 days to expire. Okay, so let's assume that let me also place the chart on the right side here. This is the 1-hour chart. Okay, that so we could say that for short term, so we could say that right now it's it's like in a consolidation mode over here, or we could also say that it found a bottom and it is going to rally from down here. So I told you the beginning of this video that I'm expecting to see a better number for the NFP. So I'm expecting to see a rally in the US in the US dollar, and also in the US dollar Japanese yen. So that being said, what I'm going to do, I'm going to take a short position just in case that I'm wrong, and I'm going to take it in the forex market. So I'm going to sell this. Okay, so I'm going to sell this with 10 lots. That would be 0.10 lot size position in a regular MT4, and I'm going to place here a stop loss at, let's say, 100, maybe 1750. Okay, so this is my stop loss, and I'm going to leave my order free for the profit. So I'm going to take a sell position just in case I'm wrong. Okay, so my position now should be active. Yes, as you can see, the order has been successfully processed. Okay, so this is my safety order. Okay, just in case that I'm wrong, I want to make some money on this one. But my real order would be this one, to go long US dollar Japanese yen. So if I want to go long, what I want to do now, I want to buy an option, okay, until next week. And seeing the price now, it's 160.80. I'm going to take my strike price the closest possible, and that's 117. Sorry, I'm going to buy this option. Okay, and I'm going also to buy it with 10 lots. Okay, that's 0.10 in a regular Forex and MT4 platform. And why I'm going to do this? I'm going to do this because if I'm buying this option, my loss is going to be limited to this. You see, buy 10 117 strike price with expiration on February 12 for US dollar 57.90. That means, and I'm going to place this order now. So what is, okay, as you see, the order has been successfully processed. Okay, so what does this mean? It means that if I'm wrong, okay, and we are going to see a bad number, the only loss that I'm going to have on this position, on the long US dollar Japanese yen, because I just bought a call, okay, so this is like being long, the only loss I'm going to have on this position, it is going to be the premium that I've paid, the $57 to buy the option. Okay, and this is going to be the only loss, but I'm going to make money on the regular US dollar Japanese yen sell position down here. Okay, I have a stop loss order that is going to limit my loss in case in case the price is going to go higher. But I will, with this position, I will recover the premium that I've paid for the option, and I'm going to cash some profits. Okay, now why I want to trade like this? First of all, because I want to have a limited stop loss. Okay, I know how much I am disposed to lose here, so this is why I want to buy the option in case the price is going to be against me and to go down. And in the same time, I am selling US dollar Japanese yen with a pretty tight stop loss order. Okay, so most of the brokers do not allow you to hedge. So what I've just did now, it is hedging, but it's like a legal hedging. Why is that? Because I'm trading two different instruments. Okay, I did not took like a long US dollar Japanese yen and short US dollar Japanese yen. What I did here, I was a sell, that is a short US dollar Japanese yen, and I bought a call option for the US dollar Japanese yen. So I am trading two different instruments, and this is not, the type of hedging that most of the brokers do not allow you to do in their accounts. But I'm trading two different instruments, and this is allowed to do. As I told you, this could be like a legal hedging. Thank you for following me.